not so great here, but we'll just see. We'll just try and work with what we have. Okay. All right. Okay, so now we're recording. Let me try and be on my best behavior now, since we're now recording. YouTube is watching. Okay. So, your test 2 revision. Okay. So we have already highlighted the fact that we said that in the question, it required that you do your cash receipts journal, cash payments journal, and your petty cash. Okay. This was a coffee shop. They asked you to do it on the perpetual inventory system. They said ignore that. Guys, they said ignore that. It couldn't get any better than this. Okay. Then they said gross margin 30%. Okay. That's all that they communicated. Okay. So they did not tell us whether it's on cost or whether it's on selling price. Okay. So we then would have to go look at the actual formula for gross margin. So maybe we can even just quickly delve into that. So here, you know, you would need your model. C plus P is equals to SP. Okay, they said gross margin is 30%, so profit is 30%. Okay, then what else do we know? Since it's gross margin, what else do we know? How, guys? Why do you say that? You're right, but why? It has to be? What has to be over 100%? Why do you say that? You're right, but remember, I want you guys to not be guessing. I want you to know. There's a fundamental underlying principle. Because remember, selling price could also be more than 100%.
It's not gross margin on the 100%.
From the way I see the question, they just said uses a gross margin of 30%. So they didn't say whether it's on cost or on selling price.
So we can't say over 100%. So the fact that it didn't say on, you have to use 100%.
What do we do when they don't say on? There's something we do. Remember, I'm not saying you're wrong, but how you're arriving at your answer is where I have a problem. Because if they had said markup 30%, were you going to do the same thing? No, if they just said markup 30%, would you do the same thing? What would you have done?
Markup 30%. 30% over the profit. I think 30% over.
So let's say this bottom one is markup. I put 30% on the profit, then what would you do? Can you see now why I'm trying to drive you to? So remember, when they don't say what it's on, you have to say gross margin or gross profit percentage, all right, is equals to what? What's the formula? There you go. Over selling price. And since profit is on or over or divided by selling price, what does that make selling price? Did we not do this? So this is 100%. Okay. So I want you to visit this, okay, so that, because now I'm going to show you why I'm being so fussy about this. Because I did say you're right? Here's why I'm being fussy about it. Because they could have said markup is 30%, and if they said markup is 30%, oh my word. Let me do it down here. So markup, what's the formula for markup? What's the formula for markup? Profit over? Yes, over cost, 100%. So, can you see? Profit is divided by or is over cost in this scenario. Would then make what? Cost 100%. Can you see that? And then guess what? Selling price is when it's markup 30%. What is selling price?
Right now.
Yes. 130. 100 plus 30%, isn't it? So can you see? If they had given you markup and you had followed the first logic, you would have been wrong. And that's what I'm trying to ensure. Regardless of how they give it to you, you're good. So this is the underpinning that I'm trying to make sure that you guys understand. Okay, right. Did any of you do this? You never? If you didn't get your test mark, then it might just be, let's talk about it in the break. I'll show you your mark, because it might, some of you, I didn't find you on VC Learn. So it might be that you're not supposed to be part of my group, or maybe you might have had issues with VC Learn, or whatever the case may be, but I did email the marks. So if you are part of the pile that I received, I have marked your script. All right, no problem. So let's get back to these transactions. So here, first one, Fairland Coffee paid via EFT, number C1 for merchandise worth 6,800. Okay, this was bought from Beans Ltd. The moment you see that, all right, EFT, you know this is going to which journal? Cash payments journal. Okay, next one, withdrew number number C2 was made to replenish the petty cash impressed amount of 10,000. Currently only 6,000 is in the petty cash. Okay, so we withdrew 10,000. Nope. Whenever we withdraw money, it's, yes, cash payments journal, isn't it? Yes, because this is affecting the bank account. Okay, then next one, cash sales of the merchandise bought on the 1st of March. According to the cash register roll. Cash sales, where do we record whenever we receive money? Cash receipts journal. Okay, right. Then next, made payment via EFT. We made a payment for rent of the premises, 9,000. The premises is owed by Brighter Day. Okay, that's not really relevant. What are we recording that in? CBJ. Okay, next one, issued check number RR4 for services rendered to Loftus at 3,000. So we issued a check. Yes, CRJ. Issued receipt. So we issued the receipt. It's the CRJ. Okay, that also took me a second there. Okay, purchased printing paper for 500 Rand and tea for the employees, 150, using the money in the petty cash tin. Doc number P1. Yep, this is petty cash. Journal. Okay, everybody happy? Okay, right, next one, received a bank loan from FBN, 10,900. The bank paid the amount directly into the bank account. CRJ. Whenever we receive cash, CRJ, even though it's a loan. Use 500 from petty cash to pay for fuel. P2 was used. Okay. Petty cash journal, 100%. Thank you, sir. Next one, 25th. Bank statement from FBN reflected transaction fees of 150 and interest on the favorable balance of 80 Rand. My students are awake. All right. This is CPJ, the first one, the 150 transaction fees. That's CPJ. Then the 80 Rand interest on a favorable bank balance. That's going to be CRJ. That's us receiving money. Does that make sense? Okay, cool. Second last one. A bought packaging material of 120 and milk for staff. All right, use 25 Rand from SPA and paid using petty cash journal. Okay. Yep. This is PCJ, all of it. PCJ. So it's different things that are being affected. Then bought 4 kg coffee beans as inventory from Beans Ltd and paid via EFT. Beans charge 130 per kg. So 130 times 4, that's definitely CPJ, yes. And the total there, just we might as well just knock it out the park now. 4 times 30, 520. Thank you, sir. Thank you very much. It is 520. Okay, so when we record it, at least we have that amount right there. Okay, so then now we simply ask ourselves a simple question: which journal do we want to start with? Okay, so we want to start with the CPJ. So then we go to the CPJ. Okay, so here I started with the CRJ. Okay, but now I've just put these things together so that we can discuss how are they getting to this amount? How are they, you know what I mean? Because that's what revision is all about. I'm not trying to reteach you. I'm trying to show you what was required of you. Okay, so I'd advise that you take this here, because remember, this is how I told you that you must approach this like this. So when you have this picture here, then you know, okay, this, since we said we're starting with CPJ, you're just going to be looking at where we put CPJ. Does that make sense? And recording those transactions. Saves you time. Have you guys taken a picture? Okay, you can also just share it on the group. Okay. Right. So I see we are like 1 minute to our break. So maybe let's take a break now. We also did a lot of theory. So let's take our break now. And then when we get back, we'll jump into that question. And then we'll jump into question 2. And then we'll call it a day.